Welcome, everyone. I'm back with Alejandro, and today we're going to discuss Disney. And many of you people out there probably know Disney if you grew up watching some Disney movies and cartoons. And Disney stock is ticker symbol DIS. And if you guys have been looking at this stock, you notice that its stock has kind of not been going anywhere fast over the last few years, unlike a lot of other companies that have done much better. So we're going to discuss Disney's current financial progress and things to look out for. So Alejandro, feel free to take it away.
Hello, Michelle. Hello, everybody. Thanks again for having me. It's been really cool to be here with you and super excited to talk about Disney today. I think this is one of the big opportunities at this moment. Again, as we always say, there's nothing, no advice, but yeah, I think it's a great company. It has a lot of years, and we're gonna talk certain points that are very interesting to look into a little deeper, and maybe you get to a conclusion that you want to jump in with a mouse. Okay, so Disney has two big segments. So it's Disney Media and the parks. And every one of those two segments has sub-segments. So the Disney Media has the linear networks with ABC Television, ESPN, National Geographic, Fox, A&E, History. Then it has the direct-to-consumer, which is something where there's the big change in everybody's trying to go for this market. There's a lot of stuff I will talk about later on from this part because I think there is a lot of value embedded in it. Hotstar, I mean ESPN Plus, Hulu, and then there's the part of the licensing that they give different companies. And then there's the Disney parks, which is the theme parks and resorts. There's examples like Walt Disney World in Florida, Disneyland Resort in California, Disneyland Paris, and there's others, Tokyo, and several others. There's the part of the cruise lines, the vacation clubs. There's a segment called National Geographic Expeditions, and there's the consumer products where they license their names, their trade names to different companies, and they just charge a fee. All this is, I don't want to forget to mention that as we see it is very diversified. Disney is a very experienced company, and obviously they are trying to go where the puck is going. Like Buffett always says, they're trying to get the best return on every dollar spent. So they are spending at this moment the most in direct to consumer, but the other parts are very important as well, and they keep making money on them. How they made the money? Through affiliate fees, advertising, subscription fees, TV distribution, ticket sales in the parks, food and product sales, and again, the licensing of the brands. Here are certain numbers of the international channels that I found there's so many people that know Disney that is just crazy. I mean, with the Disney Channel, they have 151 million. National Geographic has almost 300 million. That number to me is crazy. I mean, so many people just follow the channels. And again, like Buffett always mentions, Disney is in the mind of a lot of people in the world. So it's not only share of market, but share of mind. And Disney is very present in the mind of a lot of consumers around the world, a lot of parents, and there's that recycle effect that Disney has in people because you see the mouse when you're little and then you grow up and you don't want to be looking for other things. You know, the mouse does the job with your kids. So this is some important acquisitions that they did. They bought Pixar for $7 billion in 2006, Marvel for $4 billion in 2009, Lucasfilms for $4 billion in 2012, and Fox Century. This was a huge buy, and it was 70 billion, all improving the company. Obviously, when they have bought this company, there's been a debate if it was overvalued, but these were very valuable firms that they are being able to consolidate, and they're still working on getting it to work the better they can. And I think the path is looking bright, but the numbers don't really say so. I am going to talk a little about that in the next slides. So here's the revenues by segment. So linear networks that we saw at the beginning is ABC, the direct to consumer channels. But direct to consumer is where is the big thing in Disney to me. They are having in sales almost 20 billion. And this segment is losing money. Let me show you the slide, the next slide. So right here we see direct to consumer, they've been growing, but they're losing money. So the operating expenses is almost 23 billion, which is crazy. But I believe, and I would like your opinion on this, Michelle, and is that different from, for example, a restaurant when you, for example, sell a pizza, your cost of goods sold is that pizza. So I mean that value is going. In the other side, a lot of the operating expenses for Disney has all the content that they are creating. And that content is being spent in the income statement. So basically it's like they create a movie and that movie is being spent that year. But as we all know, Disney has the characteristic that in time they recycle that movie. So they come up with Avengers or Avatar and they just resell it again. But they are spending that year. So if we see the P of Disney at the moment is really low, they are just making around 3 billion when in years past they were touching around 12 billion. So a lot of people are like, oh, wow, that P is going down. But I feel there's so much embedded value in the content they are creating at the moment, because in the future, they are going to be able to reuse that without having to spend more money. So I think this is a very important point to look into if you're interested in Disney, because I think there's a lot of embedded value in there.
Yeah, and to your point, Alejandro, like you said, if they make a Spider-Man movie this year, it costs some money to make Spider-Man movie, but then a lot of children, they don't only watch it this year, they will watch it again and again for the next 10 years as they're growing up. So it might seem like expensive, but the Spider-Man franchise has been somewhat unstoppable. Like it's been some of the highest grossing movies they've ever made. So in many ways, like if they find a winning formula, a winning franchise like the Marvel and Star Wars, those will continue to pay dividends for many years. And then people will keep buying Star Wars things. Like I went to Disney World this year, and in the theme park, there was like the Star Wars world. And I couldn't believe so many people were willing to spend hundreds of dollars on a Star Wars lightsaber, like making their own custom one. So it's incredible. So, you know, it's a little deceiving, right? It looks like they have a lot of expenses, and maybe it might appear like they're taking somewhat of a loss at first, but they might be recouping some of it in the future. So it's sort of a kind of calculation you have to make if you get to know this kind of company.
Yes, absolutely. I think there is just what you say is right. I mean, there's so much value embedded in the money that they are spending today, but is going to be able to be reused in the future without no extra expense. So here, this, I mean, I'm not going to read this, but it's where I saw that they were spending all the content in the income statement, which certain part of that can be capitalized and just amortized through the years, but they are spending it like in the year. And again, the important part of this is that they can reuse this during the next 10 years, as Michelle just said. There's the little political dilemma. Everything started because Disney criticized a stable bill on sexual identity, and then the government came back. Just certain people in the government just start saying that they were not paying enough taxes, that they were getting preference treatment from past governors. Then Disney sued DeSantis, and overall it's a big mess. The important thing of this is that we as investors need to take advantage when something like this happens. This reminds me a little when Chipotle had a foodborne poison illness, and their stock came down. But I mean, really, that company wasn't affected. What was affected was the name. I mean, obviously they lost sales for a bit, but then it just came back. And we as investors, we just need to look and take advantage of this type of situation. What I think, I mean, I think they need each other. I mean, Disney is located in Florida, and Disney brings a lot of people to Florida because, I mean, I think if Florida is known for something, it's for Disney. So there's like this cycle. I mean, that they need each other. Disney pays around 1.2 billion in local and state taxes. So I mean, it's not like they are not paying. They may get a little loopholes here and there, but I mean, overall, they do bring a big thing to the state. Disney employs around 75,000 people directly. I mean, indirectly, I mean, there's thousands of people employed by them. They are planning on investing in Florida around 17 billion during the next 10 years. So, I mean, again, as I said before, they need each other. Disney is located in Florida, and they will get to something that is fair for both, I believe. At the end of the day, I mean, I just feel since they need each other, I mean, they are going to work out. But in the meantime, we as investors need to just be looking to see if we can take advantage of this opportunity, since obviously that stock, because of this, is also affected. What would Buffett like? I mean, obviously, he has talked about Disney a lot during the years, the big brand mode that Disney has. I mean, it's just, I don't think there's many names that are so present in people's mind. I mean, that share of mind that Disney has is just amazing. They have big distribution. Again, like I said, what Disney represents in the mind of so many people. As we said before, the recycle use of all their content, because again, they produce something, they see the numbers, and they will come up with the same movie in 5 years, and they are not going to have to spend anything in cost of goods sold like many other companies. I mean, not many companies have this great advantage. And something that Buffett said, which is funny, is the mouse does not renegotiate his contract, because, you know, we have these big actors that nobody knows them. Somehow they make a good movie, and the next movie they want to charge 10 times what they just got to pay. We are fortunate that Mickey Mouse is not allowed to do this. And the lessons for me are, try to find a service or product that attaches emotionally to your customer. I think this is something that makes me remind of See's Candy. I mean, people are attached to that brand. I mean, people love Disney, and it doesn't matter how much they charge. People are basically going to pay for it. You can grow through buying other companies or businesses at the right price, as we saw. I mean, there's several buys that Disney did, and obviously the important thing is that it is at the right price. But overall, from what I can see, I mean, they were great buys. And try to make your leader a home run hitter, and I think Bob Iger is one. So I think Disney, it is a great opportunity. Again, not advice, just is what I think. I'm looking deep into it because the price is almost 15% less than what it was 5 years ago, and obviously the sales have almost double. And yeah, I mean, the P is not great at the moment, but again, I just think there's so much value embedded in their content and in their brands, and that if you are able to understand it and find a way, it's a great opportunity for pulling the trigger and just riding the going up of that great company and stock, I think.
Yeah, and thank you for that. I saw your also point of how Bob Iger has been a home run hitter, and he, I think, ran Disney for 15 years before there was a change in leadership, where I think Bob Iger had been saying he wanted to retire, and then he appointed Bob Chapek, or the board did or whoever, but Bob Chapek had been supposed to be the next CEO for Disney, and he only got to be there for maybe 2 years, and then Bob Iger came back. So in a way, whatever Bob Chapek was doing was not really helping Disney grow or achieve its goals. And I heard different things, like he was trying to consolidate a lot of things and do a lot of cost cutting that maybe a lot of people don't like. Like at the Disney parks, there used to be way more perks and more things that the people who go to the parks could do, but then they raised the prices and took away some of the perks. So in a way, Bob Chapek's cost cutting was making their own customers unhappy. And then also there were other things going on with, I think he was consolidating efforts across the different media departments of trying to, kind of do too much. And maybe, some of the leaders in some of those creative departments did not appreciate what Bob Chapek was trying to do. And, maybe he thought he had the support of what he was doing, but I'm not sure where there was a breakdown. And so it's really interesting how both the CEO got ousted and also recently the CFO, Christine McCarthy, also is stepping down. So you can see there's a lot of changeover at the management level, and that could be part of why we're seeing the stock also going through this event of kind of fishtailing and kind of being brought down. So it's kind of interesting how that could be part of why it's creating maybe a buying opportunity if you've done your homework and understand what this company is about. Again, not advice. We're not saying anyone should buy or sell this company. It's just for educational purposes. But what do you think, Alejandro, about the streaming service? Because I think Bob Chapek got a lot of heat over kind of how the streaming service was done because they were making such a big push to get a lot of subscribers. So they kept prices low for a while. But I know the streaming business was Disney Plus, maybe losing some money for a bit.
Yeah, I think, I mean, it is, everybody is going there. And if I checked the annual report for last year, and they have lost some subscribers from what you said, because they did raise prices this year. But I feel that the subscribers that are with Disney now are the ones that are just going to be there forever, which is what they're looking for, because many times it's like a restaurant. I mean, if we can offer 3 burgers for the price of one, but then in the long term, we are just getting customers that are just coming because of the low price. But we want to get customers that will be coming back whenever everything is normal. So I think, as you said, Bob Iger is a home run hitter. I even heard that from Buffett, which, I mean, is big words. So I think the word of the streaming service is big, but at the same time, I don't think there is another company that has the moat and the brand power in the mind of people as Disney has, especially in the kids. And the thing with that is that when you see that as a kid and you see it when you grow up, as I said during the presentation, you want to show that to your kids again. So I don't think Amazon has that. I mean, Netflix has been doing a good job, and if you see their financials, I mean, they're doing pretty good. But Netflix, I don't think. I mean, they do have stuff, and I personally, I'm a member of Netflix, but I don't think none of them has the brand power that Disney has. So
yeah.
Yeah.
Yeah, I think parents automatically trust Disney, just like Buffett said also, he made a talk at a university like in around 2000, and he was saying, you're going to get a VHS tape of Disney. You're not going to question it. But, if we think about it, like people are just going to put Disney Plus and the kids can watch almost anything. I mean, there's some stuff that are more for mature audiences, but for the most part, a lot of it is child friendly. And even though, even though it's surprising to see that unlike Amazon and Netflix, that Disney stock has been kind of not really going anywhere. And yet, do you know if they have a lot of long-term debt? Like what could be, besides their expenses making their earnings look lower, is there anything else that you saw as a red flag in their financials?
So they do have a big debt. They owe around 50 billion, but the interest rate is really low. They are paying like 1.5 billion, which is around 3% a year. And I think they did get into this big debt when they bought Fox Century, I mean, which they pay 70 billion. So I think this is where they did get into a big debt. But at the same time, I mean, I just think, yeah, the brand that they have, if you go to all the biggest sales in movies in history, I mean, I think out of that top 10, which I think Avatar was number one, 8 of them belong to Disney. And as we said before, I mean, they're going to be able to recycle this. So they already have some stuff that they know it works, and it's just a matter of time for them to just get the profits from those things. And it's not that easy to build that franchise in the mind of people. I mean, if, for example, Avatar, I think the number one sold almost 3 billion. I mean, that is crazy. That is some huge numbers that they are the owners now. And to recreate that, so basically replacing the cost of those assets, I mean, it's not going to be easy for anybody. So I think, I don't really know if there's going to be one winner or 2 winners or 3 winners, but if you ask me, I mean, I will certainly bet on Disney to be one of the survivors of this war between all these big guys, because there's big guys. I mean, Apple is in it, and
Yeah, all the streaming. Yeah. Yeah, so it's very interesting because like compared to Apple and Amazon and Netflix, Disney, it would appear that they, their stock has been knocked down just on in terms of performance. Like they're kind of at the same place they were in March 2020, the beginning of the pandemic, in terms of stock prices, whereas almost everybody else mostly went up. So it's surprising that like I think a lot of the reason why the stock maybe is in the current doldrums is because of the management turnover. Like that causes a lot of uncertainty, and people are like, oh, we don't know what's going to happen. Like why is the management not as strong? So that could be part of why the stock has been hit so much, right? When otherwise, you know, the company itself is very strong, and even if, like Buffett said, you want a company that even an idiot could run because someday one will. So Disney, even though, I'm not saying any particular CEO is an idiot at Disney, but like if they had a less than ideal CEO, but yet Disney is still, performing, people are still going to the theme parks, people are still going to the movies. So it's not like people stop going to do Disney stuff if, whoever's in charge, like I didn't even know who was in charge at Disney for a long time. So that did not affect, you know, if I saw a Disney movie like Mary Poppins with some of my nieces and nephew some years ago, like it didn't matter who was the CEO. I went to the movie theater and saw that movie because it's for the children. So yeah, like things like that you will do no matter what. So yeah, I think like we talked about, Disney still has an incredible moat, and they've built up such an amazing content library that's hard to beat. And that's one of the questions is, it's like a race. Like even Netflix, they have to spend a lot to build up this content, but maybe once they built up the content, maybe they'll be able to extract more kind of royalties, or extract more out of some of these shows, because some movies, they might be short term, like people only watch it when it first came out and then they forget about it. Or other movies, they'll keep watching it for all the time, like, and that's why they will keep their subscription, right? So some things are more worth it than others. So I guess, yeah, it's definitely an interesting situation, right? And was there any other points you wanted to mention about Disney that we should keep in mind?
No, as you said, I mean, right there, as you just said, definitely, I totally agree. I mean, there's certain shows from other, from Amazon or Apple or even Netflix that are probably going to be a hit right now, but I don't really think none of them has so many content that is going to be able to be recycled in the mind of in the future of people, because yeah, I mean, Disney just has this power over everybody, I feel. And yeah, and as just to finish, I mean, I think it's an addition of political mess, the PE being so low, them competing in the streaming wars. So all of this is just keeping the stock down. But I just think, as you said, it's just such an amazing and powerful company that I think it's a really good time to dig deep and understand the company. And maybe if you believe on it and you understand it, go ahead and put some money on it.
Yeah, but not advice. That's just,
Yeah,
you know,
absolutely.
yeah, I mean, we don't want to tell anybody what to do, but yeah, like I think like you said, as long as they can, do reputational damage control with the political situation and get, regain some of the trust from consumers and as long as the consumer feels like they're being treated right, that's what's most important. So they keep coming back and I think Bob Iger is good at doing that. So I'm sure he will be able to manage well enough for that. And otherwise, yeah, the besides the political stuff, like that was maybe from the predecessor. So they have to clean up a little bit from the previous CEO, and then hopefully they will get the ship back on track. And you think they will eventually make the streaming service profitable? Do you think that will eventually, not be so money losing?
Well, I think that's I mean, in my opinion, I think that's a fact because I mean they are just spending so much to just get viewers and just but that library is going to be able to recycle. So if you analyze that segment in a few years, I believe the cost of content is going to be so much lower compared to I don't think the sales are going to be lower. So I
Yeah.
definitely think they are going to be a winner in this.
Yeah,
That is
and as
my
long as they also pay down that debt from acquiring Fox, like if people keep watching The Simpsons or whatever they got from the Fox deal, right?
yeah, absolutely. Yeah,
Yeah,
absolutely.
that was huge. You when you showed that list of some of the I couldn't believe they only spent so little for Marvel and for Star Wars, Lucasfilm, like compared to Fox. That's I mean, it makes me wonder. I hope whatever that library of content they got from Fox is worth that deal because that sounds pretty expensive compared
Yeah,
to the other ones.
yeah, absolutely.
Yeah. Well, thank you so much, Alejandro, for sharing all this knowledge and providing the insights into Disney. It was wonderful discussing this company with you, and I thank you so much.
Thanks to you again. It's a pleasure to be here with you.
All right, till next time. Bye.